Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, October 20. The year's 2019. Let's talk trading. Weekly open and gap. I hope you're having a good weekend, and if you're trading today, I hope you're in profit. But we have to talk about money and risk management. Um, I was looking at some of these emails that these other traders are, sending out trying to get me to go to this webinar or that seminar or get on this, can't lose trades the 4 times out of the year. You're going to make 1,000% or whatever else, they're selling. It's just too funny. But the thing is, all you have to do when you trade is make sure you have your risk management in place and you don't lose any more on any one particular trade than you are willing to lose. It's really simple. It's not rocket science at all. Okay, weekly chart here. As you can see, all but one gap is filled. I don't know how big those gaps were, but I would imagine some of you made some profit. As far as the weekly, you see here, we dipped down in that weekly wick zone, the lower one, and then we shot back up. Now we're in the upper wick zone. Last week's was almost a doji, not much distance between the open and the close, only about 8 pips on the week. Okay, for the year, we're down 116 pips from the yearly open. And for those of you wondering why we look at these levels, it's because that's where things are measured from. So that's why we look at the yearly open to see where price is in relation to that level. It's just like when we look here, we have the month right here. This was the first day of the month, and you can see price opened inside and it's already broken above. So you can take that trade here. If you took it, you're up about 2 pips at the moment. But it's another one of those simple horizontal line trades that just seems to keep paying off. I mean, we're not doing anything magical. That's the beauty of these systems. In fact, somebody was asking me about the confirmation he posted. Said he was watching one of the Wick Zone videos, and he was asking about confirmation. There is no confirmation. Price gets to the line, you take the trade. So, for example, here we're in the buy zone. If you want to take this trade, you just take the trade. I mean, the confirmation is price moved from the open into this zone. Now it could go up or it might turn around and go back down. You don't know. I don't know. Nobody knows. The shadow knows, right? So you place your money and you take your chances. And that's why you put your stop loss in case it doesn't work out. Inside bar, see the inside bar from 1 month ago. And right now we're 1 pip above it. And there's a daily inside bar from 3 days ago. We might get into that range again. Oh, so speaking of range, we've got 3 pound pairs already over 100 in range. Notice how far they are down below the open. So that's telling you something about the pound. And you can see on the daily chart, price exited that lower wick zone here on the daily. So if you took that short, there's a chance of making about 10 pips on that trade right there. On a slow Sunday, or depending on where you are in the world, Monday, we're putting in a H1 highest open for the week right now and for the day. And there's the weekly H1 lowest open. And you can see here, there's the monthly D1 lowest open, yearly H1 lowest open. Once again, just looking where we are relative to these levels. Pivot point was inside the buy zone, so no real bias. So if you did go towards it, you were rewarded because price went away from it, then it came back. You could have taken the crossover here at the daily open and maybe picked up about 5 to 8 pips just closing on the pivot. Rat zone, only 22 pips of range, so we don't have any rat trades at the moment. And you can see here, here's the pivot, here's the weekly pivot. We already hit that weekly pivot, but we didn't, I don't think we hit last week's weekly pivot. Let's take a look here. Nope, 107.87, I mentioned that last week. So we'll see if we take out that pivot. We may not. But we have already taken out the daily. Price action. Price doesn't like staying between two lines. 3 ball at the bottom, green at the line, and you could have probably picked up at least 5 or 10 pips on that trade and been done with it. Wick zones, here we go, in and out. Once again, the confirmation is price gets in the wick zone. Here it was going down, so you take that trade, exiting here. Here price was going up, so you take that trade. Here price went down, but it didn't make a new low, so maybe you scratch that trade. It's coming back up, you take that trade long, and there you go. Once again, on my favorite, the previous day, week, and month, open, high, and low, just trading at the line. I just turned on this trading profile. As you can see, we've got a couple pips moving to the upside. And the Einstein line's getting ready for a long trigger. See, we've been buying the last 156 ticks. And looking at the range in terms of ATR. Now, you have to notice something here. There's only about 14 pips between the daily open minus half the ATR2. But it hit the ATR. It hit this line. Remember, this is a place where you can look for reversals and or a place to start taking profit off the trade, depending on how price is moving. If price is, steadily moving, then you might not want. But if it's struggling, then you might want to take some profit there. Okay, what do we? Oh, the frequency distribution here. We're looking at the weekly high minus the open. But this was cumulative. There was something I wanted to switch this over to regular. So I wanted to show you the number of times or where those spots are. So you see here, high minus open 50. So right there, there's a spot, but then there's also high minus open greater than 100. 28% of the time. So you can see if you get this far, there's an opportunity you might get this far in terms of pips. And once again, we're looking at weekly high minus open, not daily, but weekly in this. And here, if we look at the ATR, I believe this indicator does it have that same feature to do that? No, it doesn't. Maybe I'll have to add that feature in, where we can either go between the cumulative and the normal frequency distribution. I'm trying to think. I don't remember if there was any other questions, but traders, please, if you're having a problem with the indicator, send me a chart showing what you see so I can see what you see so I can figure out what's wrong. And if there's some screenshot of an indicator and you're saying, hey, I want this indicator, Can you send me a chart showing that indicator so I know which one you're talking about? And I think that's it for things going on behind the scenes requests and like stuff like that. Other than that, it's just going to be, I'm going to probably have a quiet week. I've got some things I have to do, but I'll still try and put out trading videos every day for you. But just remember, this isn't really that difficult. And, it's really funny how the marketing hype is just going full tilt, it seems like, in trading. I mean, they are just trying to sell you everything, you know, get get you on board. In fact, I saw one guy said he had something like, was it 1,300, 1,400, 1,500 people sign up for his program, and he's selling the program for 1,400 bucks. He made over $1 million, grossed over $1 million right there. So that just kind of goes to show you why these guys do that, because it's profitable. I mean, and if you wonder why I don't do it, because it kind of goes against my principles. Um, people showed me things and they didn't charge me, so I have to kind of pay it forward, pay it back. So that's one of the reasons I don't do it. Plus, I don't want a business like that. I don't want all the things that are associated with those kinds of businesses. Because what you see, you only see the tip of the iceberg. On those guys put in a lot of hours and a lot of work, or they're paying people to do that, and it can be a headache. I mean, they might portray they're having fun, but all the little details that you have to do, and you got these people asking the same questions over and over. I mean, you have a support staff, and people get sick, people make mistakes, you know some people aren't honest. It just goes on and on. But more power to them. I mean, hey, you selling something for 1,400 bucks and you sell over 1,000 units, hey, you scored. But I would be very, very, very wary of those things, because hey, price moves up and down. You enter a trade, doesn't matter the reason why you entered. That's not going to make whether or not you win. That's up to the market. That's up to some trader if he wants to push price in your direction, or some other trader makes price go the other way. You got no control over that. You just have to understand that. Once that sinks in, that could be the time when you really start to, you don't worry about whether or not the current trade is going to be a winner or loser, because the worst case scenario in most cases will be it hits the stop loss. And of course, boys and girls, fellow traders, these videos are for educational purposes only, and your results may differ from mine. Okay? So, and just keep in mind, trading is risky. So, if you want to trade and you want to get advice, you should seek it from an accredited financial professional. That way, when they lose your money, or you follow their system and you lose your money, it came from an accredited financial professional, rather than some guy you just listen to off of YouTube or some trading forum. So, fellow traders, I hope you all have a nice week, profitable week. And remember, it's not what you trade, it's how you trade it. So get out there and drain the banks.